The market briefing, 7th of September, just gone 8:30 in the morning. We have already had quite a bit of significant European data hit the market this morning, which seems now to be weighing on European equities, and that data is German industrial production. If I just switch screens here, you should now see the chart for German industrial production data coming up. And here you can see the result coming out at minus 1.5% month on month versus an expected 0.2%. This is the worst German industrial production data for 2 years. So negative data coming out of Germany this morning, not really having a huge impact on assets at the moment. And one of the reasons perhaps being that, well, what does it actually mean if you're getting poor German data? Because it's not like the Fed, we have a look at the DAX here, it's not like the Fed whereby weak data means the Fed are going to do this or strong data means the Fed are going to move in a certain way. German data isn't really having such an impact. So the DAX is just trading towards the low of its range after that data. Nothing particularly exciting. The same with Euro stocks, but Euro stocks just sort of looking at yesterday's low. I've got a tiny Euro stocks trade on just to get my feet wet this morning. I was in slightly larger, taking some of it out and just sort of holding on to a couple of clips just to see and feel what happens. But European equities just slightly on the back foot after that data, and I guess you could argue bunds very slightly supported, but nothing too dramatic, nothing too exciting after that data. But it does bring into a question when we talk about central banks, because obviously we've got the ECB this Thursday, and the ECB if you read the FT, I'll send you a couple of FT articles. The ECB have a bit of a problem at the moment in that if they are to commit to the current quantitative easing plan that they have stated they will commit to, then something needs to change. And something needs to change because they literally don't have enough bonds to buy. As you know, they've got certain rules whereby at the moment the program is set to end by March 2017. Nobody believes that will be the end of the QE program, but that's what they have communicated to us. And also the ECB cannot buy bonds below the deposit rate of minus 0.4%. A third caveat to the ECB bond buying program is that they can't, the bonds that they buy have to be in line with the size of the economies from which they are buying the bonds. So they will buy more German bonds than they will Greek bonds, for example, or Spanish bonds, I should say. So there's certain rules that the ECB, self-imposed rules that they have committed to for this monetary loosening program, but these rules now mean that they can't actually complete the purchases that they have communicated to us. So it's difficult because what the ECB will need to do on Thursday is tell us how they can extend the program beyond March next year, or how they will be able to let go the rule of not buying bonds below the minus 4% deposit rate. All of this is contentious, however, because the Bundesbank very much don't want that to be communicated, and you've got the hawks and the doves in the ECB really at loggerheads at the moment, and it's a confused message coming from the bank, and it's a difficult policy. So Thursday really is, I think, a live meeting in terms of, I think the language is going to say to us how confident the ECB can be in meeting their quantitative easing program commitments and what they're going to do in order to meet those. So have a look at the euro. Obviously the euro over the last few days, because of the US data I'll talk about momentarily, poor US data really supporting the euro here. And if we go to daily chart on the euro, we've really been stuck in this pennant. I would say you can see just there with your eyes a pennant from 1.14 to 1.11 really since June and July. We're just pretty much right in the middle of that range, I would say. So nothing too exciting here until we get some further information from the ECB. So that's on Thursday. That'll be the main action really, I think, for this week. And it comes obviously after that very poor German data. Problems that the ECB have, inflation is still only 0.2%. Now they've got a target, like most central banks, of 2% inflation. Inflation is only at 0.2%. GDP is well below 2%. So we've got low inflation, low growth, high unemployment in areas of Europe. The ECB needs to do more. But in order to do more, they need to change the rules of the program that they've so far committed to. So you can understand the headache that the ECB might have in front of them. Now that's talking about the ECB. What about the US? Because if Mario Draghi thinks he's got a headache, Janet Yellen has a migraine. United States ISM, non-manufacturing PMI, came out. This was the lowest print yesterday in non-manufacturing PMI. This was the lowest print, really, since the financial crisis. Here you've got the recovery in 2010. This comes after poor manufacturing data out of the US, which comes after poor employment data out of the US on Friday. And the Fed have a real problem here. The Fed have a real problem because now, if you look at the countdown to the FOMC, the market is saying there's only a 15% chance of a rate hike at the end of this month. I would actually sell at 15%. I think 15% is quite generous. They're saying there's only a 15% chance of a rate hike at the end of this month. And it's just for the Fed, it's just delaying and delaying and delaying something that they're so desperate to do. Here, you can see that's my Euro stocks, just a bounce in European equities here. So I got stopped out that second clip. But hopefully you guys, I'll just show you my ladder here again. Just got stopped out that second clip, so net flat. But hopefully you guys could see who are watching that trade. It was only a tiny trade. You could see the advantages of scaling out of some of that position when it was on the side meant that giving it a healthy stop and holding that on, more committed trade that European equities might move lower over this European data means that I could take that opportunity with no cost. Okay, so European equities moving back to their highs. I was short, it's been stopped out, but because of how I managed that trade, it's flat. That makes sense. Just down one tick for the size I was trading. Okay, so let's go back to that Fed window then. Almost no chance of a September hike. They are desperate to hike, but the US data just won't allow it. And it means that they're delaying and delaying and delaying what they don't have a buffer. And they're less likely to have a buffer now. Should there be a slowdown in growth? Should there be further fallout in Europe or further fallout from Brexit or slow growth in China? The Fed's hands are still tied. So Williams came out last night pretty hawkish, actually. Even after this data, Fed Williams' comments overnight were saying September is absolutely a live meeting, the economy is strong, employment is high, and we should move, which goes very much against the data we've recently seen. Okay, so that's the Fed. Now going back, one more thing on the central bank chat, just as we have the Bank of Japan lessons here. I'll share this article with you guys as we talk about it in the room. But one of the problems that the ECB might have, or that one of the things that the Fed are trying to avoid, is the potential that you keep monetary rates so low for so long that they stop having any impact at all on the economy in which you're managing. And this is just what the Bank of Japan are going through. They've had ultra-loose monetary policy for years, and this article is suggesting the only thing left for them is helicopter money, actually giving citizens a direct injection of cash to spend it. That's what we want to avoid. Also in the FT, there's a great article here, market checklist for September. Obviously, we've got the ECB kicking us off tomorrow. We've then got the Bank of Japan meeting. This is coming up on the 20th to the 21st of September. That's going to be really important given the pressure on the Bank of Japan to try and do more. We've then got the Fed meeting at the end of September. So all three of the world's largest central banks are going to tell us exactly what they're going to do with this huge problem that they have, whereby the extraordinary monetary policy does not seem to be having the effect that they would wish. Then we move into the US election. I'll talk to you guys about the US election as I go further into the today's session. So it's an interesting month, guys. It's going to be a very interesting month to trade. We've already had great oil volatility, certainly on Monday. Thursday is going to be a big day. For today, data-wise, well, we just had UK housing data, pretty much in line with what was expected. Poor German data. That's it, really, for the rest of the day. We've got US JOLTS job openings, as you would normally expect, and the beige book coming out. Normally you'd have oil data today at 3:30, but for you oil traders, remember, because it was a bank holiday in the US on Monday, there's no oil data today at 3:30.
Time at the top of the...
Okay, so that's it, guys. Poor German data, not really having an impact on markets as we're looking at them, but it's the poor US data of yesterday that has really impacted markets. Just have a look at gold here yesterday, moving all the way from 13.20 up to 13.55. This is really saying no hike in September and unlikely for a hike in December. The dollar under a lot of pressure, as despite the Fed's efforts, and this was a really coordinated effort by the Fed to try and make us believe that they will still hike in September. It must be incredibly frustrating to see the data for them now come out and prove them exactly wrong. But that's the environment in which we trade. Guys, have a good session. That's it from me. As you know, for you guys who are staying logged in the live room, I'm going to leave this camera feed on. You're going to be connected to this desk throughout the whole day visually, and I'll just turn the mic on when I can add some useful comments to your trading. Good luck. Have a good session. Thanks very much.